So welcome to the first of our three-part webinar series on the topic on everybody's lips, crypto. I'm joined here today by two guests, Lee Eaton and Dan Annan, who I'll get to shortly. But before we do get onto the series, it is dedicated to financial advisors and SMSF holders. What I would say is down in your screen there is a live chat function, so please make use of that. We are going to have moderators to answer your questions. But before we go on and I introduce my guests, I did want to talk about a quick snapshot on this topic that is very important. Our first slide on the screen shows a survey of the relative interest that Advisor Ratings undertook from average consumers in the financial solutions and products market. It captures those who have both an advisor and not an advisor. So it is a reflection of the average population. You can see cryptocurrency actually ranks higher than super, property investment and shares in terms of interest in investment. Now the second slide is even more interesting and it really relates to advisors' clients. We interviewed or surveyed more than 500 advice practices and what their existing clients are inquiring about. And it's no surprise to see retirement income there on top, but their second at 41% is cryptocurrency. So for advisors, in order to be relevant for your consumers' needs, in order to maintain a relationship, to be informed and understand your ability or inability to give advice, it's really important to understand crypto in today's world. And that's why I've got two expert commentators with me. I've got Lee Eaton here, who's the head of development from Independent Reserve, which is Australia's first exchange for crypto funds. And I've got Dan Annan, who's the CEO of Cosmos Asset Management, who's just listed actually an ETF on Chi-X, and also is, I think, entered into a strategic partnership with one of the biggest Canadian fund managers in Purpose Investments, who listed the very first global Bitcoin ETF about a year ago. So yeah, a very esteemed people for crypto. So I'm going to go to you first, Lee.
Sure.
Like for advisors, in their words, what is crypto, and how would you explain it to the lay advisor and their clients?
Sure. Well, just to explain what Bitcoin is, conceptually, it really is, a global monetary network. It's which is permissionless, irreversible, and I think unstoppable. But to really understand crypto, you really first need to understand Bitcoin. Bitcoin's where it all started, and the roots of Bitcoin is what you really need to understand. So it all started really with the white paper, which was written by the mysterious Satoshi Nakamoto. No one's quite sure exactly who Satoshi is, whether it's a him or a her or a collective of hims and hers, but he certainly left, or they certainly left behind, the technical underpinnings in the white paper, which showed how a peer-to-peer cash system could work. And what Satoshi did, which is, brought to the world, which is now sort of hailed widely as being fairly revolutionary, is this idea of a blockchain. But cryptocurrency is actually, and Bitcoin is actually, a combination of a number of existing technologies, such as the internet, peer-to-peer software, the encryption. So the crypto part of cryptocurrency is the same encryption you'd find in any secured website. But what Satoshi did was bring together the idea of a blockchain, which allows for a public decentralized ledger, which is a global, record of transactions that have ever happened. And what that really means and why that's important is that for the first time really in human history, we've got this global monetary network who anyone with internet access can participate in, without the need of any sort of third party. So, we've seen in Canada now where there's been some restrictions on certain transactions. This is the kind of thing that can't happen in Bitcoin. There is no Bitcoin CEO, there is no marketing department, there is no complaints department. If I want to make a transaction anywhere around the world with anyone I choose, there's basically nothing anyone can do to stop that. So that's kind of crypto in a nutshell.
Can I ask a quick naive question here? Crypto.
Yep. Digital
currency tokens, all the same thing?
They're all elements of the same thing, absolutely.
Yeah, just a little bit more nuanced. I think there's private exchanges or private blockchains versus public blockchains, from my understanding in that sense.
Yeah, so Bitcoin is a very decentralized public blockchain, but when we're looking at other these altcoins, so they can have various levels of centralization and control that can sort of change just how permissionless or non-permissionless some of these networks are. But Bitcoin is the first, is absolutely permissionless. Anyone can join.
And I think we're all here today because we're in agreement that this is not a flash in the pan thing. It's not some sort of Pokemon Go that's going to go, oh, this is going to take on virtual reality. And we can get to that later, maybe in a subsequent series around the metaverse and cryptocurrencies and what have you. But Bitcoin's been around for 12 years, so it's not a flash in the pan. And I guess, where do you see cryptocurrency going from where it is today?
Yeah, well, I think interestingly with Bitcoin, I guess, like I said before, there's no marketing department or central sort of management or control. The network has grown organically just through its users and the community around it. And it's gone from effectively, I guess, 2 people to start in 13 years ago to now, at best guess estimates, around about somewhere between 3 to 400 million. It's really hard to tell exactly how many, but I guess the key point is that network has grown substantially, obviously, over that period of time, and it's growing tremendously quick still. Despite the volatility, it's still growing. It's somewhere at around, call it 110 to 115% each year in terms of new users. So when you look, I guess, in terms of one example I like to give is just to put in some perspective. You know, in 2016, 2017, we heard stories about individuals mining with laptops out of their, out of their place of employment or their mum's basement for whatever, to get free power. Fast forward just sort of 5 years, mining is now really much a multi-billion-dollar industry. Hundreds of millions of dollars worth of capital has gone in. Institutions are now running that space with huge projects. We've seen people like huge merchant networks like Visa and MasterCard and PayPal have all come out and allowing, I guess, increased sort of access and infrastructure within the crypto space, which obviously helps with adoption. But it just shows you that's been 5 years. So it's impressive just to think where that might be in another 5 or 10 years, given the pace of change and interest in this space.
Yeah, and we talk about, I think we were talking about earlier, offline was, you've got companies like KPMG in Canada that are investing in this technology or these cryptocurrencies. You've got one of my favourite, he's one of my favourites is JP Morgan, who with Jamie Dimon, who was pretty anti-crypto, but his organisation itself is now one of the largest sort of investors. First
sort of commercial bank enter have a lounge in the metaverse. Yep.
Yeah, and so it's quite amazing that we're at the precipice of something that's quite revolutionary. Everyone's talking about it, but advisors currently are sitting in front of their clients and going, "I need to be able to advise on it." And I guess that's the issue that we find ourselves. And I think over the next, 2 series, this series and beyond, will help to answer that and hopefully come to some sort of solution, which is why I'm looking at you, Dan, in terms of next steps. You're trying to productize this potentially for retail investors, obviously for advisors themselves. You've got an ETF on Chi-X at the moment. So a little bit about Cosmos and yourself and what you've been trying to achieve in this space.
Yeah, absolutely, and thanks for having me. The attraction for me for entering the space with my background in ETFs was really looking at the outsized returns that we're seeing in the digital currency space, and how are we able to package these vehicles in a financial product framework on a listed exchange. Right? That was really the key driver for me, and the attraction for me to sort of join the team at Cosmos. So Cosmos Asset Management was founded by Mawson Infrastructure. Mawson Infrastructure is an Australian digital miner, and was first Australian digital miner to list in the US in NASDAQ under the ticker MIGI. So internally we had sort of this team of expertise that are in the weeds of digital currency, and the missing link was sort of really the ETF infrastructure and how do we bring it together. So we came together and just we started to think about how can we deliver access to this asset class to investors, right? And so Cosmos Asset Management's mission is really looking at the digital currency evolution or revolution, and figuring out ways to deliver access in a listed platform on an exchange in the market.
Yes, so we'll talk about the inhibitors next, obviously from an advice perspective around regulation. Yeah. I guess without those inhibitors, and if advisors had the opportunity to invest into crypto on behalf of their clients. What should they be doing? Well, how should they be looking at it from an asset allocation perspective?
Yeah, look, great question. The asset class itself is volatile, right? And I think each client and each advisor, and I'm sure they've profiled their clients and understand the risk profile for each client. But the really interesting part about the asset class, even given the volatility, it doesn't take a lot to make a meaningful impact in overall portfolio construction, right? And so in constructing the Global Digital Miners Index, which is the first product that listed in the market, we started to look at, how do we deliver Bitcoin or Ethereum or any of the digital currency products in the market in a regular framework? And what we came up with was looking at listed companies that had high correlation to the digital currency asset class.
Yep.
Right. So, the Global Digital Miners Index, which is, managed by Cosmos Asset Management, but maintained and calculated by S&P, Dow Jones, who basically helped us with this construction of the index. But again, it's a custom index owned by Cosmos. Has about 97 or 0.97 correlation to Bitcoin and Ethereum. Yep. Right. And then when we look at the outsized returns that we've seen over the past decade in this asset class, advisors, this is sort of one of the challenging points, as I heard you talk about your survey, advisors have not been able to give access to this asset class to their clients. But with the ETF structure, they're able to actually gain access. So when we look at a simple 60-40 allocation, a 1% allocation in a 60-40 hypothetical portfolio contributed 11% to the portfolio's return. Yep. Right. A 5% allocation contributes over 30% in the portfolio. So again, from a risk profile perspective, you can, if you have an understanding of your client's risk tolerance and volatility, it doesn't take much to make a meaningful impact. And today in Australia, you have access to be able to gain exposure through the Cosmos Global Digital Miners.
Yeah, I was going to say that about accessibility of crypto. Obviously, you've got companies like Coinbase, or you've got the sort of, the younger generation that can go on exchanges and what have you. I guess from an advisor's perspective, you hear about the risks associated with certain exchanges, about putting your money into areas that they're not very comfortable with. What would you say to those advisors around security on that element, given the noise and the fear mongering? And is a lot of it fear mongering?
Yeah, look, I think a lot of it is fear mongering. It's misunderstanding, of what the technology does and what the technology is meant to do. So let's talk about Bitcoin really, and the security of Bitcoin and how does that work? The security of Bitcoin all comes about with the miners. So how a miner gains or wins or gets incentivized to participate is to actually enter the network to verify transactions, adding security. So the way it works is the more miners that are verifying transactions, the more security they bring to the network.
Yep.
Right. And today you have, established businesses that their sole focus is entering the space to give themselves a chance to win Bitcoin.
But what about the Bitcoin owners that like the exchanges or the companies potentially that have been hacked in the past? Where, I guess there's that element of risk where it's unregulated, where there's no consumer protections, which is where the advice community is coming from. What do we say to those sorts of clients that are concerned around that element?
Yeah, look, I think Lee can speak to it because they're running an exchange and actually can add a bit more to it. But again, like with any technology, there's potential for risk.
Yep.
Right, and it's to each investor, whether that's the millionaire investor that's opening an exchange, to ensure that they're doing their homework to understand the platform for which they're going onto.
Yep.
Right. With any new technology, what you would see true entrepreneurs that are really trying to do the right things for investors, and then you will see those that are trying to make a quick buck.
And that's, I guess, hence why I got you here today, because investing in companies that you're vetted, or hopefully vetted to the point where that, the security and all those sorts of things, you spread the risk around and you get exposure to the
Yeah, precisely. I mean, I think, like for advisors, the ETF would be traded on a regulated exchange, which has been vetted, right? So that, again, I wouldn't necessarily call it a risk, but that pseudo risk that's misunderstood can be sort of put on the side.
Yeah.
Right.
Yeah, the only thing I'd add to that is that you need to make a distinction between Bitcoin, the network, the security of the Bitcoin, the network, and the security of the exchanges. So Independent Reserve, for example, as an exchange, we kind of exist as the bridge between, the regular dollar world and the crypto world. Yep. So that there is, so we have to have our own security protocols there. And if I talk through some of our security protocols, I think you'd agree we've gone certainly over and above what you might expect there to be in terms of security. But so first of all, with the Bitcoin network itself, it is almost impenetrable. It has never been hacked. Where you find people being, scammed, for want of a better term, is where someone has convinced them to send them their Bitcoin. Because the encryption in the cryptocurrency, if someone manages to hack that, they kind of have now got the ability to hack any website around the world. So the encryption is certainly super powerful. But in terms of, the security of it, Bitcoin is effectively the ultimate kind of bearer bond. If you control what's called your private key, which is effectively your digital signature, which allows you to process transactions, you own that asset. So whoever owns those private keys owns the Bitcoin. And that's where, when people like Dan and everyone who's vetting the people they want to deal with, they're saying, well, how secure are my private keys? Because that's effectively the question you're asking.
Yeah, no, it's interesting because I look at, if I go to one of the slides that I'll put up now is, if I look at licensees, we surveyed the 60 of the top 300 licensees, and you see the risk profile. Obviously, the top 60 are your very conservative licensees that own hundreds of advisors, or that manage hundreds of advisors. And you can see the top three categories here are: one, it's unregulated by ASIC; two, consumer protections; and three, they can't get insurance from their professional indemnity insurer. So I guess the challenge for advisors is they're going, well, I'm constrained to offer advice to my clients because the risk that the licensees are putting on me. I guess my question to you guys as industry stalwarts is, what is the industry doing to overcome some of these inhibitors that are currently in place? Because if we do go down to the next level, if we did overcome a lot of these inhibitors, a lot of these licensees, up to 75%, would actually allow their advisors to offer crypto to their clients.
Yeah, absolutely.
So what is the industry doing to overcome this?
Yeah, look, absolutely. So, security is certainly the heart of everything Independent Reserve has always done. In fact, one of the things we're very proud of was the first exchange in Singapore to gain regulatory approval, and a lot of that was off the back of the security protocols we had in place. But just in terms of what we're doing, obviously there's a big incentive just as the industry to make sure there is adequate standards, because if there's a hack or there's some kind of failing, that kind of pushes people away from the industry, and we're trying to grow the industry. So there's certainly an incentive for us just as market participants to behave really well. But I guess the broader piece is the engagement we're having with government to try and bring in more regulatory certainty in the space. And that's actually going very well in Australia. In fact, I'd say from what I can see, Australia is actually kind of at the forefront. So Andrew Bragg, who has been leading the charge, and there was a bipartisan Senate report that was handed that made a number of recommendations last October. And there was 12 recommendations in that, but primarily they focused around the things you'd expect: rules for custody, a licensing regime, and also consumer protections, which you'd expect. And the process is sort of now at the point where people like Independent Reserve are working with the solicitors and government to kind of draft up that initial legislation. And exactly when that legislation will come through, look, I don't know. It's going to take time. Obviously, we would love to see it sooner because it allows those regulated entities to say, hey, now we can deal with you as an industry on a much more sort of solid basis.
Yeah, and if you get more companies like Cosmos coming into listed product markets, making it a financial product, I guess one of the concerns around what you've raised with me, Dan, is, the ability for, to be on an APL, you need research houses rating your product. And in Australia, there are three prominent research houses. You've got Morningstar, Lonsec, Zenith. They're under pressure to start to make sure that their maintaining relevance in this market as well. You've got more investment consultants coming in, you've got more research houses coming in. So, you know, the flywheel's happening. And I guess, you know, movements going.
It's happening. And like, I mean, what is Cosmos doing to help advisors? I mean, the first thing we're doing is really figuring out how to design a product to give access in a financial product listed on an exchange. That's the first thing. And then the next step is how do we make these available to advisors, right? And that's precisely to your point, you know, then working with the research houses, right, to get them to understand the product so that the products can be rated, so that advisors can use them on their platform. On the back end of it, and I think it's going to go, it has to be two ways, right? Because in order to get a product available on an APL, there has to be some sort of demand coming from the advisors. So it's, you know, pose it back to the advisors. You know, reach out to us, see how we work together to get you there, right? Because you know, Cosmos Asset Management has been at the forefront in partnership with Independent Reserve, really working with the market to try and deliver some regulatory framework for the product. And just very recently, you know, Asset came out with guidance on how an Ethereum and Bitcoin ETFs can be listed in the market, and that's on the backdrop of all the work that we've been doing in the market. Right.
And I share frustrations just because I see these percentage figures of 40% of existing clients wanting access to crypto, but then a lot of the advisors won't give them advice. Now, in the lower privately owned market, I know, you know, some advisors are sort of saying, we're there for our clients and we're going to give some sort of guidance or advice here, you know, but they need more certainty. So, you know, I think that's where, you know, you guys need to play a role, and we need to all play a role to ensure that, because I think it's going to come from industry. It's, you know, industry will force government to make the change.
Just on government, I think I actually heard Andrew Bragg speak actually last year at Blockchain Week, and he made some really good points, just, you know, to put in context of sort of how government look at this. And it actually presents a fairly compelling case where he kind of said, hey, you know, we look at this industry and we look to other jurisdictions that might be more advanced, and they're getting capital inflow, they're getting jobs, they're getting tech innovation. You know, we want that. And so what kind of government would ever sort of go, no, let's stand in the way of that? It's in fact quite the opposite. They're saying, no, that's something every government kind of wants to attract, and we don't want to be left behind because, you know, crypto's not going away. Just witnessed, if nothing else, by the amount of capital that's flowing into the sector and people.
I look at one of the other queries, which is around professional indemnity insurance, and it's a bit like anything, you know, the insurance market will catch up just as every other market comes up to, and it might have to be a carve out for PI insurers initially, a bit like cybersecurity was, and now cyber's now part of every PI cover. You're going to find that with advisors soon, that crypto is going to be part of PI insurance. But to your point, if your allocation is small enough and you can risk that, I guess the element for PI insurers, and I'm sort of talking to the licensees and advisors here, is you've got to make sure that you manage that PI risk independent of whether it's insured or uninsured.
So, I mean, again, yeah. I mean, it's certainly attaining insurance in this segment, whether for advisors or professionals. It's not easy. Let's just put it that way, right? And there's a short list of global insurers that are actually participating in the space. I can tell you offhand from the work that we've been doing. But that said, you know, all we can do from an issuer perspective is ensure that, no pun there, but make sure that we put together a product with the right exposures and educate advisors on how they can use it within their platforms, right? And so, you know, we've done great homework around asset allocation, around how the product works. I think with Digga, which again, first product traded on now CBOE Australia, formerly Chi-X, investors now have a framework where they can gain access, right? And again, it doesn't take much within a 60-40 portfolio. I mean, you can design your asset allocation however you see fit, whether it's 70-30, 60-40, but it doesn't take much to make a dramatic impact in the portfolio.
So we're almost at close now. Any closing remarks, Dan, Lee? What's the future of crypto? This is the first of 3 webinar series, so don't give away too much. Okay. But Lee?
Well, I think to understand Bitcoin, you have to understand that it's really, and crypto, it's a growing network. And that network, just by looking, I guess, the on-chain metrics of how people are coming to that network. If we just look at those alone, even almost irrespective of the price, like I said, we know we have about 300 million users. I think to put in context, the internet had been around for 13 years in about 1997. So at about the same point, there's probably a few more users who are using the internet, but actually the rate of adoption of crypto is growing faster. Yeah. And we're only now at a usage rate of somewhere between 3 to say 4%. And there's a lot of people left to come to crypto. And if we just look at those on-chain metrics, what we're witnessing, even despite the price, is those long-term addresses. So the people who've been in Bitcoin for a long time, they're not selling, they're actually increasing. In fact, we're reaching all-time sort of records in terms of the amount of illiquid supply that is now sort of being taken off the exchanges, which a lot of people to come, less Bitcoin left. I think it's going to be a really bright future for crypto.
What's your
Bitcoin.
Closing remarks, Dan, for advisors?
Yeah, look, I think, at Cosmos, our mission still stays the same, which is continue to figure out a way to deliver access in the ETF wrapper on exchanges. If you look at the Australian ETF market, roughly 130 billion in assets, approximately 50% of those assets sits with advisors. And today, advisors are struggling to gain access to deliver exposure for their clients. Yeah. And so our mission, and again, with the recent partnership with Purpose Investments out of Canada, $14 billion fund manager, first global player to deliver Bitcoin ETF in the market, which paved the way for all of us sitting here talking about, digital currency ETFs. I think for Cosmos, our goal in the future, what the future holds for us is, leverage that partnership to give Australians access to that exposure as much as we can and as quickly as we can.
Well, thanks, gentlemen. Our next webinar will be coming up in 3 weeks' time. If you haven't already, throw in some questions. We'll do our best to answer them over the coming weeks. There are some more questions coming up in the next webinar. It's going to get more and more interesting over the next 2 series. So please stay tuned, and thanks, Lee and Dan.
Thank you for having us.